please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Like we've been pointing out, the banks are the leader of the pack today, and the PSU banks are shoulder to shoulder with the private sector banks today. I'll just read out the list. Bank of India 3.5%, Indian Bank 3%, HDFC Bank 2.6%, Syndicate, yes, Central Bank, IDBI Bank, all of them about 2.5% higher. Okay, that includes PNB, Union, Central. I think any bank you pick, it's up over 2%.
Today is one of those days where the market will forgive you. You know, you may end up buying something at the high point. It may come off a bit, and you will still make money. Today is that kind of a day for traders because you're getting follow through today. You know, it's not just about opening gap up. It's opening gap up, first dip being bought, and then you're seeing follow through. So that's where you think traders. No,
I'm making the case for Bank Nifty with a reason. Yeah. We have an important banker joining us. Rajkiran Rai, Managing Director and CEO of Union Bank of India, is with us. Mr. Rai, good morning. Thanks a lot for joining. You all raised money. You all raised money at the right time. You already have a 2,000 crore capital, but the market is willing to give you higher and higher valuation. Is this all, or would you want to raise more money?
At this point of time, we are waiting for a decision from the government on the amount of recapitalization. After that, we'll take a call.
Okay. What's the current capital adequacy and how much would you like it to be?
After this QIP of 2,000 crores, our capital adequacy has improved by 70 bips actually. So we are comfortable for the December quarter now. So now the next quarter we are expecting the recapitalization to come from the government.
Okay, next quarter. So have they indicated any time? Is it likely to be January?
No, we do not have any idea on the timing of the recapitalization.
Okay. Well, now if we can come to the NCLT cases and your exposure to it, how much of the first 12 cases have you provided for? How much of the next 28 cases are you provided for?
Yeah, the first 12 cases, our provision coverage is 55% now. So we actually, for till March, we have already covered the provision requirement. And for the second list, we need another 1,090 crores of provision before March 18.
Okay. To get to 50%?
Get to around 54%.
Okay.
Okay. So what kind of resolutions are expected, say, over the next few months or so?
Expression of interest in the first list of accounts is already there. Okay. In the January 1st and 2nd week, we will have the financial offers from the potential bidders. So we will have a fair idea by January 2nd week about the resolutions and the kind of offers coming in these accounts, the first list of accounts.
Okay. What is the sense you are getting? Will 55% of provisioning be enough? You know, in some of these cases like Monnet Ispat and Jyoti Structures, we now know that there is only one bidder. So is it likely that 55 will be inadequate and you have to make higher provisioning?
See, according to our estimates, LGD in the corporates on an average will be 60%. We may need another 5% provision on an average. Because there may be cases where we may get only 20–25% of the money, and there may be cases where we'll get 60 to 70% of our money.
Okay.
So on an average, internal our estimates is we may need around 60% provisions.
Okay. Well, I'll just clarify. LGD for Mr. Rai is an easy expression. It's loss given default. So the kind of losses that is expected because of a default case. And this 60% is only for the first 12. Or is it also for the entire 40, including the 28?
This is actually the present corporate NPAs what we have.
Sure. Okay.
So we have estimated the worst case scenario is, because it's the worst case scenario, it can be on an average 60%. So as I said, that there may be cases with higher losses. One case what you mentioned, even though we may see some improvement in the offer from the earlier numbers. So. But then this is what the worst case scenario
is.
Mr.
Rai, and there are a couple of best case scenarios as well. We're just discussing some of them. For example, in certain steel assets or a couple of power assets where, you know, banks will recover everything and there would be money on the table still?
Very difficult to predict, particularly when it comes to power sector. We are seeing some proactive steps from the government. And another thing I would like to clarify, our stressed assets, which are likely to slip in the next 6 quarters, more than 50% is from the power sector.
Okay.
Now, if there is some resolution in power sector, our position is going to substantially improve in the next year.
Okay, in fact, that was the question I was coming to, because even in the previous quarter, your slippages moderated to about 3.9% of your previous year loans. So that's something that I think that the street was heartened with. Can we see a further improvement in the next few quarters?
Like we expect, actually till now the slippages are in that trend only, but then there are 1 or 2 major corporates which where certain discussions are on, which may disrupt these numbers for particular quarters. But overall trend actually in the slippage is similar, and it will continue to be so, except for some disruption by 1 or 2 major corporates.
So which sectors are these corporates, which sectors do they belong to?
I don't think now I will talk further on this, because these are the accounts which are being discussed. Yeah.
Okay. No, fair point. But Mr. Rai, is there any worry among the banking circles that the ordinance needs parliamentary approval, that promoters could still come back in the fray? Any worries on those count? Are conversations and consultations you know, going into a pause mode to wait for this political clarity?
I don't think this is an issue. We are going ahead with the process.
Okay.
We have sufficient clarification on this, and our insolvency professionals and creditor committees will take the right calls, which is right as per the law.
Okay. Now let's come to growth. What are you forecasting for the full year? Will you get into double digits?
Yes, yes. Credit, actually, we are already in double digit.
Oh.
Now, with the capital issues behind us, I think we can slightly improve on our credit growth now. There is good demand, and will definitely improve on credit growth.
So you will do what, 12% you think?
Yeah, we are around 12 as of now. I think we should sustain this kind of growth now.
And what about margins? Are you likely to improve upon your previous quarters? What is the an average we can work with for the current year?
Now my global NIM was 2.09 last quarter, and we have given a projection that we'll reach 2.25 by March. It seems that it is achievable. 2.25 NIM by March is achievable.
Okay, and finally, your slippage ratio, it has been coming down, but it's still higher than some other banks. Where do you think, I mean, will slippages definitely be lower for the second half? What might be the annual slippage ratio?
See, credit delinquency, we have given a projection of 4.5% for the full year.
Okay.
So we should be around that figure according to our estimates.
Okay.
Okay. Thank you so much for joining us and talking about your company and of course the business. We need to get back to the markets because still at the high point, and it's a phenomenal run that we're seeing in the banking space this morning, up almost about 1.5%. Good time to get our technical experts back in to tell us what stocks to look at. Nitesh Thakkar, Prakash Gaba and Sandeep Wagle are with us. Prakash, I want to start with you. Do you think today could be a trend day because you're getting a feeling after looking at the initial moments? And what stocks would you look at?
Certainly looks like a trend day. It looks like buy today and just leave it alone. Maybe we exit on Monday or Tuesday. Certainly looking good to me. I like two stocks basically. Chennai Petro is looking good. Good support in the regions of around 414 zones, 430 zones. And 414 zones can climb to around 444. That's a buy. I also like HDFC, but from a slightly longer term perspective, I think it's heading to levels close to around 2000 zones. Stop was 1850. Now it's already gone up. We can have it stop at 1860.
That's a positional call.
Absolutely.
Okay. Well, Mitesh, good morning again to you. Is there a nifty trade now, or you should have taken it at open?
No, I think we did discuss that. I think, earlier around 9:20 that this is a good time to buy Nifty. That looking at the multiple sectors which have given reversals on the hourly chart, I think it's difficult that the Nifty will drop by more than 30 points. So it's moved up by about 25-30 points since then. But yeah, I think anything close to 10,340 should invite long positions. Keep a stop of 30 points and look for 10,400, 420 as your primary target, and then possibly even higher levels. Coming to my stock calls right now.
Yeah.
HDFC Bank is a buy with a stop at 1864 for targets of 1920, and I had a buy on Eicher Motors around the 29,100 mark. I think it's already moved up by about 200-300 points, so we'll avoid that, but on dips I think it still can be bought.
Okay, that's interesting. Actually, a lot of these stronger stocks are now surging towards the all-time highs. Maruti has already done that. Just see the intraday chart of TVS Motor. I mean, that stock has been phenomenal, and that stock has also moved back to its all-time highs. Escorts, which had corrected a bit, that's making a bit of a move back. So a lot of these stocks are right now making a move. Let's pull out TVS Motor as well. That stock also at the high point right now. Sandeep, good morning. Your thoughts and in terms of stocks, what are you trading?
Good morning, Anuj. I think this is a very clear breakout. We should see these levels being sustained. I think the Nifty is moving towards an all-time high. Stock specific, I would go with the Bank of India, stop loss of 176, target of 186, and a buy in a Jet Airways where a fresh momentum has started, stop loss of 685, target 732.
All right, gentlemen, thank you very much for joining us with your stock picks at 10. So market's still in very, very firm terrain. The Shalby Hospital IPO is about to list, so that's about a minute away. We'll just wait to see what kind of attention it gets. What a great day to list, you will have to say, on a day when there is so much of tailwind for the stock itself.
I think 237, yeah, that was the pre-opening price. That is about, lower than the band. 245 to 248 was the price band. It was expected to be a quiet listing anyway. I mean, the growth of this company has not been that great. If you look at FY17, it's done just about a double-digit 11% revenue growth or so. So not too many people had high expectations from this listing.
It was. I mean, I was reading a couple of reports, and it was a bit of an avoid recommendation. I mean, and on a day like this, if you're opening with discount, clearly there's something wrong with the issue.
Shucks. Okay.
Subscription was also very subdued. I mean, less than 3 times totally, 2.8 times to be precise. And the growth, as I said, is not substantial for the company, just about 10-11%. It's fairly valued compared to its peers like Narayana Health, Apollo Hospitals, etc. It's trading at about 15 times EV to EBITDA FY19.
Overall, you will have to say, obviously, today even emotionally.
Congratulations, Shalby Limited is now officially listed on the stock exchanges. I request our special guests to please remain at the bell for photographs. Thank you, ladies and gentlemen, for joining us.
Well, that's a 2.25. Okay, now it's coming down to a 1.37. Okay, now getting into almost flat terrain. 1 rupee lower than the offer price. Okay, it is still a discount, and the unfortunate part is also that it's at a time when hospital stocks are not investors' favorite or consumers' favorite, perhaps. And that's another thing which would have cast a shadow on the listing.
Absolutely. And I think in a market like this where you have so many high growth companies, to see a company that's growing at about 6-7% or at best 10%, maybe it might not find so much, appreciation.
I mean, even the overall subscription level is what, 2-3 times subscribed. So obviously it was not as if it was a huge pent-up demand.
Yeah, also the concentration is in just, few areas. So that also is a bit of a worry. But I tell you something, the market is again giving you minor intraday dip. I mean, from the high point that is. But a lot of stocks are surging right now. MRF is at high point. Lots of stocks of the day today, of course, led by HDFC Bank. But metal stocks are doing well. Nalco, Hindalco, Vedanta. A lot of this is because of what's happening in China as well. So let's go across to Manisha Gupta to find out how our commodity markets have opened. Manisha, morning again.
Morning for that, Anuj. We have opened slightly on a firmer note, though it is the rupee appreciation which hasn't had the calculation as higher as we have seen in the global markets. But starting with the crude oil prices, and we have seen positive cues come in for this one. The crude prices are up nearly 2.5% in this week, and this is perhaps the 5th straight week that you have seen gains continue in this commodity. While, of course, it's the tighter markets that has been supportive. The only thing that you haven't seen a run-up rally continue in crude is because there are expectations that the US shale output in the first half of 2018 will head to record highs, and that has been putting the pressure on those prices. The gold and silver in the meanwhile has been trading volatile as well, following the currency moves there from US dollar to what's happened in the European Central Bank announcement yesterday. We are slightly off the highs, not so much because the international markets are trading in the positive. As I said, the rupee appreciation to the highest in last couple of months is something that has brought this calculation on the lower side. But most experts will tell you that we have bottomed out here and you perhaps are looking at a good investment buying in these couple of precious metals. The base metals then have been following on what China data and events have been coming in as. The manufacturing data has come in positive, so has been the investment numbers, and retail sales have slightly been on the higher side as well. So you have seen the steel and the aluminum output decline. So put together both of these fundamentals and you have a buying strategy here. The Shanghai markets are trading more positive than what we have mirrored in the Indian markets here. But even then, the steel ingredients, that is zinc and lead, have opened on a firmer note. Markets are anticipating a good battery demand as we get into the winter season. And the fact also, important would be to watch out on what happens in the month of Feb, because that is when China would come back from their New Year holidays, and that is when the markets are anticipating a very strong demand to come in. Buying strategies is what we have in the meanwhile from Comtrends for the precious and the industrial metals. For the gold prices, they're expecting a higher level of 28,500 to hit today. They also have a buy recommendation for the silver prices. Remember, that one is up nearly 4% in this week. 37,700 is what you could see there. They also are advocating a buy in copper prices for targets of 442 for the day.
Okay, thank you, Manisha. You've lit up the equity screen as well. Thanks a lot for the commodity strategies. Vedanta up 4, Hindalco up 2.5, and Nalco as well up 2.5. We'll take a break on that note, but thereafter we will concentrate on the primary market as well, on Shalby hospitals, and of course we're going to give you what Parliament will have on its timetable as the winter sessions kicks off today.